making sure everybody knows that I am this live stream an hour later than I wanted to. There we go. What's up, brother? Sorry, had some technical difficulty getting this all set up correctly again. Took me a while. All I need to do is find my stupid chat. There we are. And that could be here. Okay. This will be recorded. Alright, get this pop in. Again, it'll be recorded. Alright, 5, 4, 3, 2, and transition. Turn up my mic. Testing. Testing. Looks like I'm pretty well in range. Turn on the desktop volume. turn it down on my side as well. Seems like it's getting my freaking wind from the dam. That's crazy how well this thing picks up audio. I think that should be pretty good. Right there, seems like. Cool. I just want you to hear the fans. Seems like it's too close to my fans. I moved everything around a little bit. So my friends, you know, if you can hear me pretty well. Might move my face around, might exit it. Anyways, so let's go talk about this little guy down here, SRSI. I don't know who else will honestly be joining because I was supposed to schedule on this weekend and I forgot it was freaking Super Bowl. That was my fault. Basically a holiday for us Americans. So let me get it all bare bones to how it's looking on your side when you first open this thing so we know how to set it up to make it all looking pretty. There's a lot of stuff that goes along with this, like a lot of signals, a lot of whatever you want to call it. And it's just for anybody who needs help with like identifying what those signals should look like. After a while, you start to get a hang of like what a bearish divergence is, a bullish divergence, hidden divergence, a both sides, all that stuff. And there's different ways to understand like momentum using all of these types of labels, but it's all basically just a visual thing. On whoever wants it, how they want it, Once you get a hang of it, you basically get to get it bare bones, like how I have it. So let's just pop the entire thing up. So it looks pretty messy, obviously, at first. But again, all of this stuff is just trying to tell you where momentum is going in different ways. So it's just on you to figure out which way it looks visually more appealing to you. Basically, this background stuff, all it's telling you is the crossover of, not the crossover, but once RSI or SRSI turns pink or SRSI turns blue. I think on your side, originally, the colors should be red and green. The standard colors are bullish and bearish stuff. But on mine, I just like the colors of being blue and this pink color. I haven't changed the colors of the original stuff on the back side because I have it basically bare bones. So all this signifies is red background and blue background I have here is the same thing that this SRSI line is signifying when it has a bullish blue band or a bearish pink band. So let's just get rid of that now that we know what that stands for. SRSI is the line that basically acts like an RSI. It's slightly different than your standard RSI, slightly different calculations, but does exactly the same thing. It takes the same base calculation of RSI, but removes one aspect of it and removes a smoothing aspect of that formula and replaces it with a different smoothing aspect to the formula. And that's the only basically difference on the base background stuff. Obviously, when you go to your inputs, you notice that I have it standardized at 19. That's not necessarily always necessary. It just depends on what you like to see visually. I like it at 19 because to me that's right in the middle of where I like to see the crossover and the bullish crossovers and bearish crossovers and stuff like that. So again, it's just on you what you want to see. But I recommend 19 and sticking with that because that's what we're going to be learning everything in this time frame, or that not time frame but length. So moving on, just on explaining what all this stuff is. Again, it's just all this visual stuff. Short RSI is just the standard SRSI, but with a smoothing factor of 5. I think it's weighted moving average of 5. The mid band, we know what the mid band is. That signifies where bullish momentum is and bearish momentum is. Above the band, you're bullish. Below the band, you're bearish. Pretty simple. Your upper band and lower band. These bands, originally, I thought they would be, when I applied them to them, like a long time ago, I thought it would be useful for reversals. But I found they're not as useful for reversals, but they're more useful to understanding where momentum's going and how strong it is. So if you get outside the upper band, you will start flat. You will be extremely bullish. When you get below the lower band, you'll be extremely bearish, and that's essentially it. You could choose not to have them or have them. I don't really care to have them too much anymore, so I may end up removing them eventually, just because. Yeah, similar to exactly like Bollinger Bands. Yeah, that's exactly what it is. I took Bollinger Bands and I applied it to this. It's literally what it is. I applied Bollinger Bands and applied it to this calculation to create these things. It can show you, like, obviously when it gets tight like that, you could anticipate a very strong reaction wherever it breaks. So it does help sometimes, but again, what we're basically trying to figure out is where momentum's going, and that's all we really care about. So if we're above the band, obviously we're gonna be super, super bullish. So like, say if you think you're getting in late, like on this trade here, say if we think it's gonna go bullish, breaks bullishly, and then for some reason you just missed the signal or you weren't around to see it, you had no service or something like that, and you're like, oh man, is it too late to buy? And to say you didn't have these bands on at first. You're like, is it too late to buy? And then you look at, you're like, oh shoot, man! Like you see RSI running already. You see like a hidden divergence. You're like, oh dude, is this gonna be a hidden divergence? Is this gonna cancel out? Should I buy? I don't know. You're like, well, let's just double check. Are we above the band or below the band? Because that will really tell us. So we pop up in the upper band. We go zoom in. And then we see we're breaking above it. As soon as we get that one close, that should give you enough confidence that trust this break, trust this bullish break on momentum, and run with it on that time frame. And you're just gonna, obviously do whatever you use to find an entry in that little area right here. Well, in one of these two candles right here. So the bands do help when if you're having like. If you're not too confident, if it's going to be a good time to enter, if you think you got in too late, because you see down here is where it would have turned flip bullish right there on this candle. And, by this time on this candle here where it confirmed it right there on the outside of the band. So that would have been a change of, 13%. Some people might be a little worried about that, especially seeing like a hidden divergence, like, from there to there. Oh shoot, wrong side. So that wasn't hidden divergence. My fault. But like that, whatever. So whatever divergence you're seeing, you're all worried. That band can help you gain some confidence and to enter with, although price already kind of like ran away. Same thing on the lower side. If it breaks below the band on the lower side, you should anticipate extreme bearish, extreme momentum to the downside, and price should start just running away or making big moves to the downside. And again, when it starts getting close and clinching, we know there's going to be a big move eventually. Basic concepts that Bollinger Bands do. Again, I don't really use them because all I care about is the baseline. We'll talk about it again as we move on with this stuff here. So let's zoom into this thing and keep talking about all the little aspects of this indicator. So upper, mid band, lower band. Then also we have all these, signals. Bear div, obviously, is bullish diversion, bearish diversion, bullish diversion. Kick-ass buys and kick-ass sells. All that is a special type of divergence that I was taught by my mentor, who taught me everything from RSI. Good old Andrew Cardwell, rest in peace, brother. but he's the one who taught me about those kick-ass buy signals, those kick-ass sell signals, and he taught me how powerful they could be. And they do poise really good. They're better reversal signals than just the simple divergences we see here. They are better at that, but again, we'll talk about the type of divergence I want to be teaching you guys, because we can essentially just kind of remove all these, because all these are doing is signifying any type of divergence, even the smallest type of divergence, like from here to here, which is fine. That will signify as probably a small reversal in this small trend here, especially if we stay below this little, we call it the short RSI, especially if you see this, a lower time frame signal like this, which these are the lower time frame signals, like this, and we get that reversal signal where the slow short RSI breaks above like that, and SRSI stays below. That's probably going to be a good pullback in that lower time frame. It'll be like a short scalp in essence in that time frame. There's many ways to use this indicator. There's many ways to take trades off it. The biggest one we're going to be talking about is the suit, like the where you get like a long-term divergence, like from this point to this point, or this point to this point. Like again, these are divergences, but on a lower scale, like on a scalping type of movement. But again, they could be very helpful to understand what all these MAs stand for, because again, if you get a simple divergence and you're writing this a bullish signal, you bought down here, right, and you got confirmation with SRSI flipping positively. Shoot, 1 second. Let me see if I'm on a long real quick. I think I am. I need to make sure. I don't think I have a sell signal. Oh yeah, cool. I'm in a long. That's decent. Got a little chopped up today. My fault though. Thought it was gonna be a little reversal. Anyways, keep talking about this little sucker. So let's say if you're riding along from down here, you bought along based off whatever type of signal you found in whatever, and you started using this indicator, and I showed you that one indication to reversals is when you get a divergence underneath the band or below the band after being above the band, or we're above the band, and on this lower time frame, right? We get a divergence, and if this divergence happens underneath this band, and SRSI is able to stay underneath that slow RSI, the reversal is most likely going to be imminent, especially if we break below the mid band. If that all happens, then that means for sure that momentum is now shifting to the downside, and you see how we stayed basically underneath this slow RSI until we reached the bottom side, and basically did the same exact thing, but on the opposite side. Except this one wasn't as powerful on this time frame, on this daily time frame. It was a good divergence that actually played out, but the signal wasn't as powerful because we did break below that slow RSI. But the signal was still there, Signal was still there for a divergence call. And again, it's all these little X's and stuff like that. You don't really need them if you know what a divergence looks like. All they do is just show you that you're seeing a divergence. So now that we know those X's are really not useful to anybody who's been trading or knows visually what a divergence looks like, even on the lowest of time frames, or lowest of degrees, like this. That's a divergence. Even though it's a very small, 2 candle pivot, that's still a divergence that you have to respect, because what happened after that? What happened after this triple tap divergence right here? We reversed. You have to respect divergences, especially when it comes to when you think you're about to come to a point where it's going to reverse price, like either based on Elliott wave, wick off, or just basic price action, whatever, coming into a resistance zone, you're going to want to see a regular divergence. So if your movement's going upwards and you're thinking it's going to reverse to the downside, you're going to want to see a regular bearish divergence on the time frame you're studying, because that regular divergences, they signify reversals of the current trend, where hidden divergences signify continuation of the current trend. So if you understand those two concepts, it helps to really understand where you should start looking for those divergences to form. So if you're assuming you're in a big uptrend and you think you're on a wave, a wave 4 pullback, you're going to be looking for a hidden divergence, on that time frame, or whatever type of price action or like analysis or whatever you want to use. If you think you're going to be in a big trend, it's going to continue on for a while, whatever the idea concept you use to figure that out or come to that conclusion, you're going to want to look for hidden divergences up until you think there's going to be a reversal based on whatever way you want to conclude to that point. You're going to look for regular divergences. So the big takeaways with my RSI is you're going to want to use it for understanding where momentum goes and understanding when price is likely to reverse the current trend. Hidden divergences are good and all, but you could use the reversal signals to get in on a lower time frame trade, and then all you have to do is start riding momentum and understanding you're looking for whatever entry model you want to use on that lower time frame to stay in that trade, stay in that trend until you get another divergence that tells you that price is probably it's probably going to be a reversal. So excuse me if I'm kind of confusing people. Let's start taking this away and start getting it to the bare bones where I think basically everyone needs it to be, so it's less confusing. Again, all these signals do is signify signals and where you should probably look for reversals or stuff like that. Kick-ass sell signal had a good reversal. Kick-ass buy signal had a good run up. Kick-ass sell signal had a good move down. Kick-ass sell signal, this one kind of failed. This one was a kick-ass buy signal. So kick-ass sell signal kind of played out after eventually, but it ended up being a reversal. But you don't really need to know those stuff. You don't really need to use those regularly. But if you see those, you could use the understanding that it's probably could be a reversal. Then zoom in on a lower time frame and find entry models based on whatever you use on those entry models. So let's remove those. Bull cross and bear cross is very simple. It's just when we cross over the mid band and crash below the mid band. So again, you don't need that because you can visually see it. Regular bullish or regular bearish. So these are the larger time frame signals I want to really talk about, because these are going to really show you when pricing has a strong chance of reversing and a strong chance of bouncing. Those are the strongest types of signals, are these longer time frame divergences I have here. These you may want to keep on just so you can visually see it, because it has a very strong calculation, like a very, very strict calculation that has to wait a big duration of time or a certain duration of time in order to fire that one. Just like the lower time frame has to wait a very short amount of time in order to fire its calculation, because it's based on a shorter type of time period. So let's remove the short RSI because we don't really need that. It's also, you don't really need the mid band either if you could just trust the shaded areas, because they're basically doing the same thing. So let's do, and all these signals and labels do is tell you what kind of bearish division it is. Like this will tell you bear. If it's hidden bear, it'll pop up hidden bear. And if it was bullish, regular bullish, let's see if one's somewhere around here. Did I move them all? I might have. No, just haven't had one in a while, I guess. That's weird. I may have to see why there's no regular bullish ones popping up. I might have actually canceled it. I'll double check the code when we're done talking about this. But obviously it's going to be doing the same thing as this regular bearish. So let's get rid of those as well. And then these are our clouds, obviously. So this lower cloud is obviously the smaller one right here. That signifies when your short RSI crosses your SRSI, and your strong cloud is basically just signifying when SRSI crosses the midband. The most important one is obviously strong cloud, and again, you don't really need the midband because of that concept. So I like to keep the colors the same. I don't know why mine changed. Oh no, I know why. This is the one I have to keep the same if I want to keep it on. Oop, wrong way. Okay. So now that we're basically bare bones, we could talk a little bit more about it. Again, all these clouds signify are the crossovers of all the stuff we're talking about. The pink one that crosses with that turns blue eventually. All that signifies is the crossover of SRSI and short RSI here. Again, all these things I have here is just for visual aspects. They're not really needed. That's why I give people the option to choose what they want visually to see. I just like mine to be like this for some reason. And again, I don't really have this cloud on that often as well. But it is useful for those short time reversals. So again, we don't need midbound either, now that we know and understand what all these colors mean. So the biggest types of divergences we like to see are, and the best ones are called when you go positive to positive or negative to negative, or positive to neutral to negative to, or the flip side, negative to neutral to positive. And I'll explain this. I have to find some examples real quick. So on this top side here, let's say we're in this uptrend, and then you have like an inclination or an idea or concept that it's gonna reverse, and you just want some higher time frame. You want some other ideas to aid that. Like for instance, say you have like this, price running into this order block, or you have an Elliott wave count that's running into this area, and you're like, but prices has been rallying so hard. Like, man, is it gonna continue to rally, or what's gonna happen? Well, that's where this SRSI of mine comes in really, really in handy, because on these higher time frames, these larger time frame structures like this, it can really show you and tell you and aid to your idea it's going to be a reversal. And the biggest ones are, again, once SRSI is clearly trending in one direction with price, and then all of a sudden SRSI loses that mid band. In this instance, we're moving bullishly upwards, and all of a sudden we create a pink or SRSI while we're still creating higher lows or whatever. And all you're waiting for is SRSI to continue to stay either pink or neutral, As long as it does not turn back blue on that divergence, and then just closes one more time back bearishly, that is almost certainty that it's going to reverse. And that's why this divergence here didn't work as well. And that's why I don't really try to pay attention to those lower time frame divergences that pop up here. They work, but they're more like scalps. Like when you see those lower time frame X's or pluses, it'll be very difficult to position yourself on this time frame to be able to get, your 3-to-1 R or whatever. You would have to zoom in like on a 1 hour time frame on those divergence calls to get in a decent trade with appropriate like stop limits and all that stuff. So if you're only working this one time frame, the best divergences happen when you go from you're trending in one direction, price is trending with that direction, then all of a sudden SRSI breaks the opposite way in terms of momentum, flashes that opposite color, and then does not flip back to the other color, and then does one single close in that opposite color. In this aspect of it, pink. That's a super strong signal. Let's find another good one. This is kind of a divergence, not really. I do like it is technically a divergence because you do get 2 equal lows here, and then that. But we'll go to like a legitimate one. Here's one that faked out, and let me show. There's a different way, and there's different ways to figure out how to know if your divergence can be true or not. And I'll explain that more. Let me just get some more examples in here to show you how strong these are on higher time frames, especially like the 4 hour time frame really well. Here's another good one here on the top side. You have all these divergences, none of them play out. This one, these 3 also didn't play out, but we didn't get the full reversal until it happened to go negative and stayed that color, and you get the reversal. Here's another one as well. Negative, neutral, did not go back positive. Strong reversal signal as long as you get one single red thing. I know this one's pretty aggressive. You probably it'd be difficult to get into that trade right there. But the aspects say true. I went back to negative. Let's go to a lower time frame here. Well, thank God I'm in a long. Holy shit. I didn't know it was going to be like that, though. Anyways, so here's another good one in the 4 hour that played out wonderfully. So, right here, we have a big downtrend. And all of a sudden, we go positive, neutral, and we don't flash back pink. We get one single close, blue. That's your go sign right there. It's all go time ahead. We should not close below that lowest low. And, the rest is history. As long as we say positive, that's all it takes. Looking for here's let's see. This is a pretty good one too. Positive to positive. You got low, slightly higher low, right? It's a hidden divergence, but it was positive to positive hidden divergence. That's it's still strong. One single kind of close. It wasn't as good of a signal because you can't get your 3-to-1 R there. Looking for regular bearish. Here's a good bearish one right here. Saw all this stuff. And finally got the breakdown. And again, this is why the regular divergences tend to just not work as well. Regular divergence, try to break down, but we just rocketed off that hidden divergence. Here's one that failed, but we'll talk about how we could understand when our divergence is likely to fail or not when we see them. So we got this, negative to negative, which is usually a really strong signal. But there's ways you can figure out if it's going to fail or not. Let's find another good positive one. Here's another good positive one. It briefly flashes positive here, stays positive, and it got reverse priced. Even right here, here's a decent one. Just a regular divergence though, not really a strong one. Here's a good strong one on the flip side as well. Negative, did it flash back positive, had a pretty good downside move here. Regular divergence. See if we can find another good positive one on this time frame. I don't think I will. This one was kind of went negative to, negative, and then reverse price momentarily. Here's a good positive one. Positive to neutral, it stayed positive and then reverse price eventually. So yeah, those are by far the strongest ones, and it's not hard to use them. Once you see them and you really think it's going to be a reversal based on, don't just use it blindly. Like, don't just look at a chart and see it and like, okay, it's going to reverse. No, you have to have like either another context, like either order blocks, smart money concepts, freaking wick off, running into an MAs, support resistance, Elliott wave, anything like that. Anything else, you need at least two things, or you need at least one other thing to aid the RSI to make it really powerful. Okay, that's the rule I'm gonna give you guys when you're using this thing. Okay, I don't want you guys coming back at me saying it don't work. And I'm telling you, if you're just smart and understand there's slightly other concepts, it'll be very, very powerful for you. Again, look how well this reversal worked right here. Positive, stayed positive. Well, it went neutral, but look, it didn't go negative. One candle close, bullish, bang. You don't necessarily enter on. You don't say if you're just trading one time frame, which to everyone who's a beginner, please stay on one time frame. Pick the 4-hour time frame, or the 1-hour time frame, or the 50-minute time frame. Don't use it daily because you're gonna be waiting for days, and you're not gonna get the practice. It's all about repetition and practice. That's why I always recommend, like, if you're learning, go practice on the 5-minute time frame, 50-minute time frame, on like using the stupid paper trading thing on this thing that they have. Hold on, give me a second. I want to make sure I move my stop up. Yeah, see, actually trading people. Like most fucking cunts. Hold on. Not up a lot. I kind of fucked myself earlier. Being stupid. They got a little chopped up in here. I'm gonna 16. I hope this gets to my price target so I would cry. That's what I need. I want to cry, but that's what I need. So now let's talk about how we understand when we could be wrong and when we could be right when we see divergence. And this goes for any divergence you see. Any divergence you see, you could use this concept I'm about to teach you guys. We're gonna go into it very briefly, not very heavily. I may at some point really go into every type of divergence look and really study them and show you how it all works. But in essence, it all is the same. Oh shoot, what happened? What a monster. Okay, so let's go find a Let me see if I can pull up something real quickie. It's all based on this little thing here. Hold on. Right here. Can we see that? I need to see if we can see that. Yes, we can see that. Cool. So this little sucker, it's called value range theory. It's just all about divergence. It's understanding how divergence works and understanding when divergence can be true or false and all that stuff. That's all it says. So this is indicating a bullish divergence that we're seeing. 0 is the first point that is the lowest point on, it'll be the lowest point on RSI or SRSI. And then you get your 1 point, and then your 2 point will be your lowest point on price. Okay? And in this final leg, there will always be an order block that is the most prominent order block. It's either based on structure or volume that is going to be the key to understanding if the divergence is going to be true or not. If that order block gets hit, that is your second point to understanding your divergence can be true, and most likely it will be at that point, at least for one step. Actual true reversal, then there's more to go to that, and all you're looking for is just those few things. It's looking for that X pivot, looking for it to get hit, and then once that X pivot's hit, you're looking for the retracement level of the movement that hit X. And this aspect is called Y. It's called Y here. If you can't really see it, sorry. Kind of zoom in here. So once divergence is seen, which this is where divergence is seen, X pivot must be attacked or broken in less time and complexity. So here's X. Less time and complexity means the time it takes for the entire move of this leg here. I've circled in red. And once that happens, once it gets hit in less time or complexity or the same time and complexity, all you're looking for is a pullback that holds 0.78 to 0.68. It could hold less, like a 0.8, 0.38 too, but as long as it holds at least these two, you're most likely going to see this entire thing reverse and this 1 point get totally taken out. And there's many different versions of divergence, but they're all the same, right? This one indicates where it actually breaks over that order block and holds that retracement. Usually when you break over that order block that we signify as X, it'll hold it on retrace. Usually when you hit the order block and stay below it, but like wick through it but close below it, you'll probably retrace to your 786. And again, there's multiple variations of this stuff. But anyways, let's see here. Like here's a hidden divergence one. Hidden bearish divergence. It's the same thing. It's always the same thing. In the leg that creates divergence, you'll have the most prominent order block that must get broken in less time and complexity, or the same time and complexity. And then once that's done, if it breaks it but can't close below it, like this one shows, you'll most likely retrace to the 786 to 0.68. If you break and close over the order block, you probably only retrace to 0.382 or less. But those things always have to happen. And and here's signifying the version where it stayed below the order block. And here's hidden bullish or regular bearish. Regular bearish doing the same thing. It's all the same thing over and over and over again. Here's hidden bull. It's always the same thing. So now that we know that, in this area here, we had 0, 1, 2. Here's the most prominent order block right here. Because it's basically our only order block on this time frame, right? There it is. All we're looking for is to get hit. It'll be this entire up move, by the way. Because this is basically kind of a break off Elliott wave in a way. So an entire up move, wick included. Okay, we have to. This is the only time you have to include the wick in terms of your order blocks when you do them this way. When you're doing this theory. Okay. Here's the time frame it took to create this entire leg of divergence. Here's the time it took to break into it. Right? At this point, since we did that, we already know for a pretty strong inclination that our divergence can be probably true. Even beyond the point of this flipping bullish once. Because that's all we need to really be confident when we see this divergence, right? But this is where like this concept comes in handy for every type of divergence you see. No matter what time frame you're on, no matter what you're looking at, even the small divergences we see. Like, even the small divergences we see, like from here to here, like that. This is always the same concept no matter what. Always. Hits that. All you're looking for is for this to hold on the pullback. Anything above anything above 0.68, 0.78, right? And then again, you can either use this time frame to get into it. Like, say if you're just confident, the way you would usually do a trading in the same time frame is once you hit that X pivot. Say if you didn't have confidence on buying the first signal, which would be this turning blue, you would wait for the X pivot to get hit in less time and complexity. Check, do that right here, and you're just buying the first down candle as closes. You're buying the first down candle that closes, and you're set partial, like a partial, at setting your stop at below the 786, just slightly below the 786. Your price should never go there if this is truly going to be a reversal. And so, sorry, your setup will be, your initial setup will be big as this, buying a partial, your stop like right there, whatever, stop there, buying a partial, and you're waiting for, all you're waiting for is just another bullish candle to get you buying more. And every bullish candle that closes, buy more until you're filled up in your lot, until you're filled up with whatever, position you want to be filled with. And then as soon as it takes off the high of this, as the high that created the valley of divergence, remember 0, 1, 2, here's that little valley thing I talk about. As soon as this is taken out, and especially if it's taken out in less time and complexity, which this one's very close, all you're looking for is this previous X pivot to hold, and as long as it does that, you get a full reversal. So let's go to one that fails. And again, it can be used for every type of divergence you see, no matter what. Like, say if you thought this was a good hidden divergence right here, right? Let's see here. Right here. Say you were looking at this, like this is a good hidden divergence, right? We got 0, we got 1, we got 2. If this is 2, we know the most prominent order block is going to be somewhere in this leg here. And I'll tell you, it's right here. This entire one. It's usually the last movement of the divergence leg. Here's the entire leg that makes divergence. Here's basically the last movement of it, right? Let's take the time from that point of divergence to there. And notice that we didn't break it in less time. Here's the time it took to create that. Didn't break it in less time. And also, notice how we didn't, even though we hit that pivot, say we hit that X pivot, you still have confidence that your idea that this hidden divergence can be true. Well, what do you check? Did we hold the 0.786 on retrace? No, we did not. Did not hold it on retrace. This divergence is not going to be true. It's going to be false. And what happens? You get a cascading downside movement to the downside. And that's literally in every single time frame. And what's funny is that this hidden divergence created another regular divergence. Equal highs. all equal highs essentially on close, right? So again, I would have taken on this high on this pivot here though. 0, 1, 2. Here's X, right there, right? Here's X. It gets taken out here, right? Here it's hit right here, right? As long as you don't close above the 786 of that movement down, it's gonna go down, and it does. It always happens, no matter what. Every time frame, always. And that logic always is true. Almost always. I would say 80% of the time. It's pretty remarkable, honestly. But it takes a lot of time to really master. You won't get it overnight. It won't be an instant hit. You won't. So find another one that fails. I like seeing the ones that fail so you can really study them and understand like why it failed. It's usually based on time. There's only been a few times where I was really fooled by it. Not fooled, but like it didn't work exactly just because like time just didn't work. And usually it came around like a very like where like Elliott Wave was even in a weird spot. So I guess it's all kind of go hand to hand in a way. Here's all these ones that fail. This is a good example. So you get your first divergence, and again, I like this one. It helps to be an Elliott Wave trader because like a real divergence doesn't really happen until you break a structure high, structure low, because a divergence should signify a reversal or continuation, right? So like for an Elliott Wave trader, like we know like if this only gets here, people like we get this hard divergence. People are gonna think like it's gonna like fully reverse, but like we know like since we didn't break this high, it's probably like an A, B, C or something like that, right? So like that's why it helps to understand like those things. So like for me, I wouldn't have cared about any of these divergences I've seen until this high was broken. So at this high here is when I start paying attention to it, just because I understand Elliott Wave a little bit more, those structural concepts. As soon as high is broken, we can do the same concept, right? You got 0, 1, 2. Honestly, since I'll take it from this low actually. So 0, 1, and then obviously 2 here, which creates that valley. So somewhere in here is your most prominent order block, which probably this one. Nope. Probably this one right here. And take the whole thing. Right here. And we hit it. And we do hit it in less time and complexity. Right? We do hit it in less time and complexity. But what fails happen? We don't get that retrace. We don't hold that retrace. We break above the 786. Therefore, invalidates it immediately. Usually, once you see divergence and you see the initial tap of X, the best entry model is waiting for this rebound and getting in right there in that little sweet spot. So again, here's another one that failed. Here's another divergence, right? Since we tapped this pivot, we move on to the next one, which is here. Actually, here. But again, hit it. Obviously, it fails it again because we broke the high. And then again, we have one more. And this one actually gets a pretty good cascading signal that breaks this low. Which again, that in this entire range is your entire 0, 1, 2 spot. And this was your initial order block. And again, it is a prominent order block that price has to close beyond. in order for it to truly signify that all this bearish momentum is truly going to be reversal. So again, that's why that value point is going to be important. After all this divergences that cancel out, cancel out, cancel out, cancel out, cancel out, we finally get a good one that breaks the previous, X pivots of each previous high, right? But what we fail to do is break the initial one that creates the value high, value low with confidence and close beyond it. If we were able to break that like this and close beyond it like that, that would signify a reversal. Just as we did on this side. We broke that value high. This type is value high because we got 0, we got 0, 1, 2. Here's the divergence. Here's the high point. We broke it. We traded above it. That's like your biggest sign of reversals. Like it's going to be a true reversal. Especially if you just barely wick over it like this and you start trading back in that range, it's probably just continue on. That hidden divergence can be true. So I guess that's essentially it in terms of what I wanted to go over in this thing. Again, the goal of my RSI is to show you momentum and where it wants to go. Okay? That's all it does. You want to use it for divergences primarily. And once you confirm that divergence, then you ride that momentum. You ride the momentum. You ride it. Once you confirm it, you ride that momentum. You trust it. You trust the momentum until you see a reversal sign. See if we can find another good little example anywhere. Good, like one that fails or something like that. Here's a decent one right here. Double top RSIs here. No. Here's one. We got 0, we got 1, we got 2. 0, 1, 2. There's our order block right there. Look what happens. It gets excuse me. That was gross. Look what happens. As soon as we break down, we hit it in 3 candles. We break into X pivot in 3 candles, and we see it's obviously way less time to break into it. What do we look for? Making sure we don't close above the 786. Well, we don't want to close above the 68, but we can wick up to the 786. We don't want to wick up to anything above here. And you see this little red area? That's usually where I put my stop when I'm looking for this setup. This will be my stop zone. I call it the red zone because that's where your stop is. Just you lose money. Red zone. So, like in this instance, if I saw this bearish divergence and I wanted to trade off it, and I had other reasons why I was going to reverse, like this order block over here, I would map out that red zone, map out my hotspot, hotspot for entry, which is the golden pocket plus the 786. Like that. And then you can do it 2 ways. You can either just set yourself up into it if you're a little bit more risky, and that's how you kind of drift. If you're like more of a high time frame trader, set yourself up at the lowest hanging fruit at a partial. Like you just set partials in this, like partial, 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 until you're like 75% filled, or like 80% filled. And then you set your stop at that red zone, which is between 886 and 95 retracement. And then obviously you target your 1 point, because if that's what you're looking for reversal as your first target. And then obviously it gets there. And then if we close beyond it, you know, that's when you potentially want to look for like to add, or you know, if it's close a partial, like close like 50% here, and then once he confirms, like once you think it's confirming, we're breaking down again, like add back to it, stuff like that. This is kind of a fake out here as we got a regular divergence, right? Regular divergence. Closes below, starts closing below this, the valley low. But it doesn't do it for long. We get one, close on it, close below it, above it, below it, bullish engulfing candle. On this bullish engulfing candle, once you saw this candle bullish engulf all these candles, price action, in just one candle close, you should definitely think like, okay, we're probably going to move up. And start looking for other reasons why it's happening. Like this hidden divergence that we saw. Right here. We got like a major hidden divergence. Double whammy. Huge one. You know, 0, 1, 2. This is X. We know that. Here's X. Right? Look at the time frame it took to create X. To break it. Or hit it. So as soon as it hits this, you're already looking for entry models. You're already looking for your, a pullback. But this one you get a super shallow pullback. Once you break it, totally break it, you get a super shallow pullback to the point, not even to the 0.3. But it confirmed a reversal because we broke into it, broke X in less time of complexity, or same time of complexity, after seeing divergence. And like, say if you weren't confident on this one, like on this candle, because you're bearish still, you'd wait till that X pivot proves to you that this hidden divergence you're seeing is true, and now you get in. All right, I think that's basically it. I don't like this structure. Looks fucking weird to me. It kind of looks like a combo, like a WXY or some weirdo whack. I'm gonna exit half my order. This looks so weird. Huh. Anyways, I'll stop the stream here, then I'll pull some charts up. Damn, that's a deep retrace. That's so crazy. Let's see here. Right to the golden pocket, though. So if you really thought this big divergence we saw on like the weekly time frame up here, we're on red alert in terms of invalidating it, because we don't want this. We shouldn't break above this area. If we do, that tells us whatever divergence we saw on the top side is not. It's not going to be true, and we're gonna take this top off. It's gonna go, or just straight up just like that. For now, I'm getting carried away here now. Okay, I'm gonna cut this down. Thank you, bro. Thank y'all. Whoever's in this, there's gonna be an upload of it, a replay, whatever you want to call it. Catch it. I will try to edit this video back a bit and then probably release it in like some format somewhere. I don't know. Put it somewhere that's a little bit more organized than my live stream stuff. Probably just post it back on YouTube, but in like a section like education, but in Elevate or something like that. All right, my friends. Any last minute questions or concerns before I get out of here that I could ask? Remember, it's all about simplicity and understanding divergence. I know there's a lot going on in this indicator that could be kind of overwhelming at first, but once you get the gist of what it's trying to tell you, all it's trying to tell you where momentum wants to go, and can you understand that? I give you a basic brief rundown of how I use divergence how I understand divergence using my value range theory concept. I don't know if that's ever taught anywhere like that, or it's even a thing like being taught anywhere like that, but it's just something I noticed over time. Like this, for instance, say if we thought as an Elliott wave trader this was going to be reversal, just like for a basic wave count. All right, we got 0, we got 1, we got 2. Your X pivot is going to be somewhere in here, right? Well, we couldn't even break that high less time and complexity, so it's probably not going to be a true divergence. Same thing, just do it over and over and over again until that X pivot gets hit, and until you hit that retracement, and it holds that retracement. That's all you're looking for. Then again, 0, 1, 2. And I'll tell you right now, once you get a divergence that is like a smaller degree like this, a smaller degree like this, and you don't really get a pivot anywhere to like really say where's X. You don't want to zoom in 1 degree, and 1 degree means at least 4 to 5 times or less, divided by. So if I was in the 1 hour time frame here, I would at least go to the 15-minute time frame. So that's 1/4 of 1 hour, right? And then in here, you should be able to find a order block, which again, you really honestly really not one in this entire area. So this will be very difficult to signify a order block. We know wicks, long wicks are on the lower side can be signified as order blocks, but this is not very good example just because we don't have a really good X pivot to define here. One may argue this entire movement could be considered it, but I usually like using the movement that created divergence, unless you want to consider this entire move, which then this would be one of those X pivots. Which if we did it that way, time versus this time, we see it probably took about the same time, huh? Took less time. And again, since it took less time, you're looking for just reasons to go long on pullbacks, as long as it holds at 786 level. Which again, at that point, it's all on how you guys trade, how you guys find entry models. But again, thank you. I'll catch y'all. I'll post some charts, some stuff like that on Twitter. If you don't have access, DM me on Twitter or on even Tradingview or even in Discord. And if you already have access, or if you for some reason lost access or whatever, just let me know. Okay, thank you all for tuning in. Catch you all on. Y'all be safe. Trade safe. Trade safe, my friends. Peace out.
Oh.